The Smallcappower Expert Interview.
Gwen Preston is the publisher of the Resource Maven newsletter. Spending years as a mining journalist gave her a deep base of knowledge and a broad network of contacts in the resource sector. She understands which projects and pieces of news matter and hears about new investment opportunities before the market rushes in. Welcome to our program, Gwen. Can you tell us a little about your mining industry experience as well as the newsletter you write?
Sure. Well, thanks for having me. I've been in the mining industry for the best part of a decade. I spent a good portion of those years with the Northern Miner, the newspaper that's about global mineral exploration and development. That's an incredible learning platform when you enter this industry. You get to travel all over the world looking at projects, so you get a great feel for infrastructure, jurisdiction, and geology, and you also get to meet an incredible number of people, so you establish a fantastic network of people within this industry, which is so important in terms of knowing what's going on. I also spent a few years working alongside Maven at KC Research. I was essentially his ghostwriter for his newsletters for a couple of years, so that provided a different base of knowledge, more of the capital market side and more of the newsletter side. And then last year I looked around and I was at the Northern Miner and I saw that we were at the bottom of the market, and I decided that I wanted to participate more actively in the mining rebound. And so I left my job and started my own newsletter.
Which factors are most important to you when investing in a resource stock?
Everything. No, I mean, that's obviously a very important question. You have to, as someone who analyzes resource stocks, you have to sort of break that down into a few categories. I would say that no one category is more important than the other. They all have to be present. So one of them is certainly people. I'm not saying that the president of the company has to have some incredible track record, because every mining CEO has to be a CEO for the first time somewhere. But within the management team and within the board of the company, there has to be some very significant experience. There has to be a track record of success, because you can't learn those lessons without having gone through those experiences. So it's very important to have that right mix of technical expertise, management expertise, experience and whatnot within both the management and the board. Then, of course, what are they working on? And that project question has to answer a couple different questions. What it boils down to is it has to be a project that makes sense in today's market, or at least in tomorrow's market. So making sense has to do with jurisdiction. So is it in a place where you're going to be able to build a mine, where there's infrastructure to build a mine? Those sorts of jurisdictional questions. Are there social, political risks, permitting risks? Those all play into jurisdiction. The project itself. Is the geology there? Is the deposit the right size? Does it have the metallurgy where you're going to be able to get the gold or the copper or whatever it is out for a reasonable cost? I mentioned the word cost. That brings up another whole area, which is what will it take to build a mine there? Does the engineering make sense? Is it complicated or is it straightforward? Does it use proven technologies or does it use something new? I prefer simple, straightforward, proven technologies, and these days you really need that all to come packaged in a mine that isn't going to be very expensive to build. It certainly costs money to build mines, but high capital cost projects just do not fly in today's market, so that all needs to be present. And then if you're looking at an investment today, that company needs to have money in the bank. We've gone through a very difficult few years in the mining sector. And if you don't have money in the bank or have access to money through whatever means that might be, sometimes companies have high net worth investors who they can go to and if they need to raise a little bit of extra money to get past a final hurdle or something like that. But ideally, you want a company that has money in the bank, because that means they will be able to not just survive, but continue advancing their projects, at least until this bear market comes to an end.
Why do you think most resource stocks have performed so poorly during the past few years, and what catalyst do you think will turn this sector around?
Yeah, we've had some tough years for sure. Why have they performed poorly? Well, metal prices. Metal prices lead our sector, and metal prices have performed poorly. So why have metal prices performed poorly? One being the strength of the US dollar, which has already hurting commodity prices. They, of course, move reciprocally. And the second being a slowdown in China, which is something that we've certainly seen a lot more of in recent weeks in the mainstream media, but of course is a story that's been developing for a long time. China is transitioning from a very industrial economy to one that's trying to be more service-based. So instead of exporting everything, they want demand to come more from within their own country. That's a required change within that country, but it's one that is impacting commodity prices. So metal prices have been hurting, and that's what's really dragged our industry down. On top of that, we've had investors leave the industry, partly because metal prices are not appealing. That's a sensible decision. And partly because the mining industry, I would say, failed to return to investors the amounts that they perhaps should have in the last gold bull market. Gold miners in particular let their costs rise right alongside the price of gold, to the point that the returns were not as exciting as one would have hoped from a commodity whose price rose so dramatically. So that drove investors away, that soured them right as very supportive monetary policy in the United States created a market down there where everything was going. I mean, invest in Google and away you go. So why would you take on the risk of the mining industry when you could invest basically in the S&P in the States and have wins for the last 6 years? So that's been sort of this terrible combination of factors that has really meant for a difficult few years for mining. What will turn it around? $1 million question. I think I am looking ahead and I see a U.S. market that is not sustainable. I see a downturn in the U.S. market happening sometime in the next 6 months, possibly much sooner, based on a Federal Reserve decision to raise rates. So I see a downturn in the U.S. markets. When that happens, I see gold responding, and I have reason to believe that that could be the beginning of the rebound in mining. Now, we're not going to have a V-shaped rebound, unfortunately. I wish we were, and that would mean, here we go, buckle your seatbelts, we're going to have a wild ride. I think it's going to take longer than that. But mining is a cyclical sector. Demand for metals is not just going to go away. Even if China's only growing at 4%, that still creates more increase in copper demand now than 14% growth did in 2005. So metals are necessary. Exploration and development cutbacks over the past 4 years are significant. The sector will turn around. The near-term catalysts, I think, have to do with a downturn in the U.S. markets, perhaps a weakening of the U.S. dollar. And then if those things start to happen, a discovery or two, a takeover success that has investors making money in our market, those are the things that will turn this around.
Which junior resource stocks do you like at this time, and why?
I'll start with two that aren't really juniors. They're producers. I like gold. I think gold will go at some point. And if the price of gold is going to go, then it's great to be in a cost-controlled gold producer with a rising production profile. And so my favorite in that is B2 Gold. They have money in the bank to continue building the mine that they just finished and to build the next one. That means that their production profile is going right up, their costs are well controlled, their risk is diversified across different jurisdictions, and I like the management. So B2 is my sort of go-to for gold production. On the zinc and gold, and then also copper side, I'm a big fan of Nevsun Resources. They are probably the most profitable miner on the planet. They have an incredible amount, something like 60% of their share price is represented by cash in the bank. And so that's giving very little weight to their very profitable mine. It's in Eritrea. That's always been what's held Nevsun back. People don't understand Eritrea. I've been there. I believe in Eritrea. Of course, it's difficult to swallow investing in an authoritarian country where people don't have freedoms and questions arise from that. But if anybody ever wants to have a discussion about why I still believe in Nevsun and in Eritrea, I would love to talk to you about it. But I really believe in Nevsun. They're incredibly profit-driven, and they pay a dividend, and they will always pay a dividend, so why not take money if they're going to give it to you? On the more junior side, Newmarket Gold is a company that is taking advantage of this bear market to build a new mid-tier gold mining company. It's a mining dream team on the board and on the management team, which is important because they're certainly not the only group out there looking to acquire assets right now. And so what matters in that sort of competition is having really good connections, having good networks. And this mining dream team has the best network probably out there. So Newmarket is a really interesting company that I think will have good leverage in the medium term when gold starts to go. And then taking a step back to more of a junior, I have two near development companies in the portfolio that I really like, which are Kaminak and Dalradian. Kaminak Gold and Dalradian Resources. One developing or getting ready to develop a gold project in the Yukon, and the other getting ready to develop a gold project in Ireland. Both of those are very interesting stories that I think answer all of those questions I talked about before in terms of jurisdiction, metallurgy, engineering, grade, cost. So when the market starts to go and majors who have put no money into exploration in the last little while and who therefore have depleted project pipelines, they're going to need to start picking up assets, and those are two assets that I think are going to go early in that cycle.
Thanks for taking the time for today's interview.
Thanks very much for having me.
Keep up to date with all of your favorite small caps. Subscribe to our free newsletter and get daily investment ideas, breakout stocks, momentum gainers, expert and analyst stock picks, and more. Smallcappower.com, investing ideas and research.